Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now today's video we're going to be taking a look at a small cap MJ company based out of Canada, and they actually think of themselves as the Amazon of MJ. So this one's really exciting. Their business model is a lot different than the other companies we've looked at in this space. The company name is Namaste Technologies. It's very popular on the forum boards and the discussion threads, and I'm excited to dive through their business model and explore this company in a little bit more detail with you. Now, they just recently reported Q4 and fiscal 2020 earnings, but before we get into it, please take a second to smash that like button, hit subscribe on the channel if you haven't already, and let me know in the comment section below what you think of this analysis and if you currently hold any Namaste shares. Now, without further ado, let's roll the intro clip and get into today's video. Okay guys, that's right. So today we're going to be talking about Namaste Technologies. This one is another small cap MJ company based out of Toronto, Canada. You can see here it's trading at a market cap of about $111 million. So it definitely is on the smaller side of some of the companies that we've been reviewing over the last couple of months. Now you can see for today they're down about half a cent, which equates to 1.75%. This is on Monday, which is the day we're filming this video. If we pull out to a 6-month chart here, you can see that they ran up all the way into the 40-cent kind of range in that early February when we saw the MJ sector really have some strength, and they've continually pulled back now under 30 cents. And if you pull out to the max chart here, you can see all the way back June 1st of 2018, it was trading above $1.50. It then ran up to over $2.50, and it's been on a continual downtrend ever since. Now, they did have some drama with their CEO, which they actually fired late in 2019. They now have a new CEO, which we'll talk to in a second here. But this company definitely has been the focus of a lot of attention recently. And on the stock forums and discussion boards, Namaste is one that continually comes up and I see over and over again. And that's why I was so excited to talk about this company today. Now, a couple things we're going to cover in this video. So number one, they just reported year-end results on March 30th. So that's really exciting. They've now also launched their online platform CanMart in the United States. They did that at the end of February, which is what they were actually targeting or had committed to in their most recent presentation. So we'll talk about both of those news releases. And then we're also going to spend some time on their business model because it is really unique in this space and it's unlike any of the other MJ companies that we've been reviewing here recently. Now, if we scroll down a bit here, you can get a quick glance at the last 3 fiscal years in terms of revenue and earnings. So in 2018, they came in with just under $20 million of revenue. 2019 was right around $19 million. And then in 2020, the most recent year, they came in just north of $25 million, which was record revenue for the company. But one thing I did want to point out is they're continually losing money over the past 3 years. Now, they have cut that loss considerably in 2020, but it is still a factor for this company, which we're going to talk about when we look at their balance sheet. As you continue down the page, you can see a description of what the company does. We're going to look at their actual website as well, but I feel like this is a pretty good summary of the overall business model, so I wanted to go through this quickly. So you can see Namaste Technologies engages in the online sale of medical MJ products, and accessories worldwide. So their main platform is this CanMart.com, which I just mentioned they launched in the United States in the last couple of months here. So that's definitely exciting with the pending federal legalization. We obviously just saw New York pass their recreational bill recently here. That one's probably still about 18 months until people can actually buy this stuff in retail locations in New York. But it's definitely the first of many dominoes that need to fall in order to get that national or federal legalization. Now, they also have Namaste MD, which is a telemedicine application. So similar to actually CloudMD, which we just reviewed, but this is actually looking at the dynamic between patients and their medical practitioners and trying to overhaul that experience and use digital first delivery for the information and the products. They then have Findify, which is an e-commerce platform powered by artificial intelligence and machine learning, which is really meant to optimize or personalize the online buying experience for consumers. And finally, they're making a push into branded products, so in-house branded MJ and MJ derivative products. that they can sell to recreational consumers here in Canada, as well as licensed MJ retail online sales in Saskatchewan. So they do have their hands definitely in a couple of different pies, but the main bread and butter of this company is really that CanMart platform and revolutionizing the way consumers interact with these brands and the way they fulfill these orders over their online platform. And they really refer to themselves as the missing link between the LPs or the licensed producers and the end consumers or users of the product. Now, if we jump over to the Namaste Technologies website, this is their current CEO, McNallie Money, and he's actually talking about the way this company is really looking to personalize and revolutionize this platform. So at the top here it says Namaste Technologies is going to leverage technology to build the world's first personalized wellness marketplace, a platform where consumers can learn about wellness products, interact with a variety of brands, and make easy, informed purchases. And it's really interesting the timing of this video because their platform itself is very similar to CloudMD, which we talked about last week, but the actual product they're selling is obviously MJ and very closely aligned to a lot of the videos we've been reviewing over the last couple of months. So I thought it was really fitting, and it kind of blends these two different industries and company platforms that we've looked at very closely here. So I should call out this company does trade on the TSX Venture under the ticker symbol N, and also on the OTC exchange in the States under the ticker NXTTF. So it does have that US and Canadian listing, which is great to see. But in terms of the video here, Money really talks about revolutionizing this platform or this mid-chain experience for consumers. So he compares their company actually to Airbnb in the sense that Airbnb doesn't actually own any physical real estate, but they're the platform that consumers go to if they need to rent real estate or go on a trip and get a place to stay. So very similar to that, Namaste doesn't actually own many of the products that they sell, but they act as a platform where buyers go to interact with the sellers. Now, another interesting analogy in this little video here is he actually compares Namaste to banks. So again, banks don't actually own the money that people deposit with them, but they are able to take that money and layer in additional value adds for their clients to really create a profitable ecosystem for them to live in. So I thought that was interesting, and it's definitely a unique or refreshing look at this space. There's so many companies that are involved in the actual production or LP space, licensed producer. And as you guys know, I'm really concerned, and I think this area of the value chain is probably the first that's going to see their margins and their revenues compressed with the addition of new competition, especially once the US comes online. I think they're going to be able to produce this stuff a lot cheaper than we can here in Canada. So that definitely concerns me. And Namaste really avoids that whole situation because they're not the ones actually producing this product. They're just involved with the sale and distribution aspect. So next up is Namaste's brand portfolio. Now you can see CanMart here is front and center. Obviously this is their big one. CanMart is Canada's first licensed non-cultivator. So what's really interesting here is CanMart was the first company in Canada that was licensed to sell MJ and MJ derivatives or accessories, but not necessarily produce it themselves. So that's definitely innovative and interesting to see as a potential investor. So the vision for this platform is to create a full MJ experience through all of Namaste technology platforms, creating the ultimate MJ marketplace. Currently, CanMart really focuses on the medical MJ within Canada, but they're ramping and expanding this very quickly. They then talk about Namaste MD, which we mentioned briefly in the initial opening there. They also have Namaste Vapes that target the more affluent, slightly older demographic, so people that are 25 to 45 years old. It's currently the leading online vape store in both the United Kingdom and Canada, along with 15 other countries worldwide. So they do have some of that international exposure already, and that again is extremely exciting to see. This company really talks about the global addressable market for MJ rather than just here domestically in Canada. So I like that forward vision that the CEO currently has. Carrying on with the international theme, you can see they have their Australian vaporizer brand. So it's currently the largest supplier of vapes in Australia. And then finally they have Uppy, which they're positioning as the ultimate MJ journal. And this really allows users to record and monitor their experience with different MJ products. so that they can see which ones work or don't work for their personal needs. Now I should say, for the scope and the time constraints of this video, we are going to be focusing primarily on the CanMart platform because again, this is where this company is focusing most of their efforts right now. Not to say the other brands aren't important, but they're not going to be the focus of this video this time around. So if we jump over to the CanMart platform here, you can see they have a number of different verticals. So they've got the flower, vapes, concentrates, edibles, CBD and topicals, and then the actual hardware itself, which would include things like pipes, lighters, storage, batteries, and the likes. But we're going to focus right now on the actual flower and the edibles. So if you look at the product offering, you can see these are all medical offerings. They've got the RX symbol there. It's interesting on here because you start to see some of the companies interact with each other. So as we scroll down, you can see they carry Apothecary. They also have MMG, and what's interesting to me is the actual G-Tech watermelon brand here. You can see on a per gram basis, they're charging nearly $15 a gram, where some of the other ones, like the in-house CanMart Lemon Z, is going for just under $6 a gram. The Apothecary is going for $4.20, along with the MMG. So it's interesting to now see G-Tech in action. We talked about in that video how their premium product really commands a premium price point, and this is exactly what you see on the CanMart platform as well. Now, one thing I will mention here, you can go up and select different provinces. So I played around with this a little bit. They're currently available across the country, so you can see all the different provinces here. And depending on the province that you've selected, there's different brands available. So if we jump over to Ontario here, you can see there's slightly different product offerings. One thing I did find interesting, I actually went through and looked at each of the individual provinces, ranges anywhere from about 8 to 12 products. So they definitely don't have a super deep menu or product offering. And that was one thing that was surprising to me. Because CanMart is really their focal point of this company, I definitely thought they would have a lot more variety on their platform. Definitely surprising, and one thing I think this company needs to ramp up immediately here. So moving along, if we now jump over to the edibles, you can see again some of the companies we've talked about. So Indiva offering their Wana hybrid sour gummies along with their chocolates. So that's interesting. Again, Indiva was one that I was extremely bullish on, so it's great to see their products are placed on this website. As you scroll down, you can see there's other offerings as well. So CanMart, again, their in-house brand, which they're trying to grow. They've then got the CBD soft gels and even some 4A products here. So as an Indiva shareholder, it's cool to see that their products are first on the list here, especially when, similar to the flower offering, there aren't a ton of different products available. There's only 15 under the edibles category, and the majority of these are all offered by Indiva. So that's exciting for me as an Indiva shareholder. But again, I think that could be an opportunity for CanMart and Namaste overall, as additional choices and variety would ultimately drive additional revenue and profit for the company. So we're now going to jump into the corporate presentation deck. This is from February 22nd of 2021, so it's very recent here. And there's a couple of really good slides that I wanted to share with you guys. So this is towards the start of the deck, and they talk about this transformational 18-month period since the previous CEO was let go and Many has taken over the ship. So it says, in a short 18-month period, Namaste's new leadership team, led by Many Mora, created Canada's first omni-channel MJ distribution platform, generated exclusivity with MJ brands, and is building a clear path to becoming the Amazon of MJ. And that's what's so exciting about this company's vision statement and their CEO, is they see extremely high potential for this platform, and they really feel the sky is the limit for this type of marketplace or online sales platform. Now, whether they can continue to execute and create the Amazon of MJ is yet to be seen, but it's definitely encouraging that they've set their sights so high. So building on that point, they state many MJ companies will fail because they haven't figured out how to make money. There's no reliable link between the customers and the products in the medical and recreational MJ space, both online and offline. So Namaste really feels like that's a critical piece of this ecosystem that's missing. The LPs are great at producing products and growing the product, but they feel like there's a void in that middle space between those products and the end consumers. And we've seen in some of the other videos that the consumer brand loyalty in this space is relatively low. So I definitely do see this as an opportunity for the company, because they can really position these products based on those exclusivity agreements to really push brands over one another and help some of these other companies build their client base or customer base in a very competitive market. And this slide really expands on that idea. So they attribute their 4 pillars of success to distribution, product offering, technology, and the community that they're building in this MJ space. Now, we mentioned earlier in the presentation, Namaste was the first Canadian company to hold a sales-only license that allows processing and distribution of MJ without actually producing it. And what this allows them to do is 3 things that are very interesting. So number 1, they can actually control their own margins and manufacture their own products based on inputs that they purchase or acquire from other LP companies. Now, what's interesting about this one is as we see the price of flour continue to drop, they're actually able to purchase the core input for a lot of these products at a lower and lower rate, which means their margins continually go up. So the second point in the middle here, they're not actually competing with any of these LPs or cultivators. They're actually acting as that missing link between the products and the consumers. So again, we talked about that at the opening here, but a very unique outlook in this space and a very different business model than a lot of the companies we've looked at. And the third point they call out is a true omni-channel distributor that participates in both medical and recreational and is able to leverage direct-to-consumer e-commerce as well as provincial distribution agreements in retail stores across the country. Now, one thing I will mention on that point, while Namaste was the first company to get this sales-only license and they focus on that online e-commerce platform, there are definitely other companies that are involved in this space, maybe not exclusively like Namaste, but one that comes to mind is High Tide, and we recently saw them acquire Smoke Cartel, which is a leading online retailer of MJ accessories in the United States as well. They've also got Grass City, which is a worldwide MJ platform online. So there definitely is some competition in that e-commerce space. But again, Namaste is one of the only companies that focuses exclusively on that experience, whereas High Tide also has a number of brick and mortar retail locations and other areas of their business aside from just that e-commerce or website experience. Now, this slide is also definitely interesting. There's a couple of highlights here, 6 that the company calls out in this presentation. So number 1, Namaste was first to market with 2.0 vaporizer cartridges. As we've seen in a number of other videos, these 2.0 derivative products are extremely exciting, and this is really where this industry is going over the next 5 years. 4 out of 5 of the top products sold in British Columbia, so one of the bigger provinces in terms of population in Canada, are represented by Namaste, so that's encouraging to see. The second point, which we've talked about here, is they actually allow the LPs to focus on what they do best, which is growing and producing products, while Namaste focuses on the logistics, regulations, packaging, and distribution. So they really try and divide that value chain and focus on their core competencies, which should, in theory, allow both members or both companies to really excel. Thirdly, they've got that proprietary AI technology that really learns customer behavior and allows that personalization on their digital platforms. Now, this is continuing to get better, same as we saw with CloudMD, and the more data and user interactions they have, again, in theory, the better this AI should be at predicting purchasing patterns and products to recommend for customers. Now, they've coined that as a USP or a unique selling proposition, along with number 4 on this page, which is actually the average order value. This was a stat that I found very encouraging. So in retail locations, the average purchase is about $50 for MJ or MJ related products, whereas on their e-commerce platform, the average receipt is closer to about $135. So nearly 3 times what it is in retail, or about 270% higher through e-commerce. Now, the 5th point here talks about their business-to-business revenue channel. So this is actually scaled from $0 to $6 million in the past 9 months alone. This is exciting again to see multiple revenue streams coming online for this company. And then finally, they're starting to sign some exclusive agreements. They cite phyto extractions in this example that they're bringing to the Canadian market that other retailers are unable to sell or distribute. So we're now going to shift gears and start talking about the financial metrics and financial results of this company. So Namaste, like we talked about, really looks at the total addressable market in terms of the global addressable market here, not necessarily just in Canada or in North America, but the worldwide legal MJ opportunity, which they cite as $74 billion with a compound annual growth rate of 20% from now through 2027. So that's this number in the middle you'll see here. They cite the Canadian market as a $3 billion opportunity. And if you look at health and wellness overall, and again, obviously there's things in here that the MJ market won't be able to address, but when you start thinking about topicals, creams, capsules, different byproducts, 2.0, 3.0 derivatives, they can definitely take a good chunk of this market, which they're estimating to be worth about $1.8 trillion. So again, the total addressable market here is absolutely massive. I also really like this map that they've included. So you can see all of Canada, most of Western United States is now legal, along with about half of South America. Europe is definitely following suit, with again about half of the countries there now considering MJ to be a legal or essentially legal product. And a lot of the other countries in the world are now starting to decriminalize. Now in Asia and Africa, still very much an illegal product, but the global attitude and outlook around MJ is changing almost by the minute, and I can definitely see this becoming more and more of the norm across the globe in the next 5 to 10 years. Now this chart is from Q3 earnings report, but I liked it and I wanted to include it because it shows the growth trajectory of MJ revenue for this company. So they've had an average 76% growth quarter over quarter since Q2 of 2018, and you can see the exponential curve of this line. This is really exciting to me. However, you do see they kind of plateaued between Q2 and Q3, and they call that the slump between 420 sales in Q2 and Black Friday or Cyber Monday sales in Q4. We're going to look at their Q4 earnings in a second here, but I thought this chart was really exciting, and this is honestly what we're seeing from a lot of the companies involved in this space, is the growth for the category overall is really rapid, and it's really driving this entire industry forward. Now this slide is from Q3 as well, so the profile of this company has changed a little bit, but at the time this presentation was put together, the company had zero debt, and that's extremely encouraging as well as a potential investor. The one concern I do see here is the cash position is very small, just under $14 million. However, it does represent about 10% of the company's market cap at this point in time. And you can see the asterisks here. They actually did a bought deal in August of 2020 to raise some additional financing. But the zero debt was great to see and something I wanted to call out. So we're now going to jump over to the year-end or Q4 financial report and scroll through this, as this is the most recent summary that's come out for this company. This was published March 30th, so it's very recent and really gives a good holistic view of how they performed over the last 12 months. So I'll go through a few of the bullet point highlights here, and then we're going to jump into their CEDAR filing as well to look at their income statement balance sheet. But here's some of the ones that they call out in this earnings report. So gross revenue for Q4 alone was $8 million. This is all in Canadian dollars compared to $4 million in Q4 from last year. So they've doubled their revenue in Q4. For the full fiscal year, they're sitting at 27.1 million compared to 16.4 in the previous year. So 65% revenue growth year over year. In terms of net revenue, that came in at 7.2 million and 25.1 million respectively for the quarter and year. Those are up 85% quarter over quarter and 54% year over year. Now the company did report a net loss, which we talked about in the initial summary, but that net loss has narrowed dramatically. So for Q4, they reported a $6.4 million loss compared to $29.7 million loss for Q4 of 2019. So a substantial improvement there. Now, in terms of the full year, they recorded $26.4 million loss. So the entire year actually had a smaller loss than just Q4 of 2019. And if you're looking at year over year numbers, they actually reported a $63.2 million loss in F19 overall. And that's what's concerning about this capital position. You can see they have about $16.5 million worth of cash on their balance sheet. Now, subsequent to year end, they've actually closed an additional $23 million bought deal. So they're sitting at about $40 million of cash. However, with a burn rate like this of about $30 million a year, it's definitely a little concerning as a potential investor. Now, hopefully they continue to decrease that burn rate and they start to see a profit eventually towards the end of the year here. But it is concerning if anything goes wrong or the CanMart platform doesn't roll out as expected, federal legalization takes more time than they think. This could be a problem for this company to stay liquid. Now, in terms of corporate highlights, they've launched the CanMart.com website in the United States. We're going to look at this article to end out the video. They've now added additional producers to the CanMart platform. Oxley is one that was interesting because we've recently done a video on that. They also added Hexo and T-God, or the Green Organic Dutchman. This was something that I really was concerned with when I started looking at that platform, was the depth of products that they had offered, and I called that out in this video. So it seems like they are starting to address that, and I think the more products they can get on there and the quicker they can do that, the better position this company is going to be in overall. Now, third point here was really encouraging. They've now received their processing license from Health Canada. So we talked about some of those CanMart branded products that they're starting to position on their website. And this allows them to start making extracted products or 2.0 byproducts that they can brand with their CanMart or in-house company name. Obviously, the margins on that are going to be much better than products they purchase from other LPs. And they then go on to talk about some of the financial measures and accounting principles. So if we now jump over to the CEDAR filing, this allows us to take a look at that earnings report in a lot more detail. You can see the 27.1 in gross revenue. They then have this excise tax, which all MJ companies need to pay. So that gets them a net revenue of 25.1, which we saw in that earnings report. If you take out COGS, or cost of goods sold, that was about $23 million. Which leaves them with a gross profit before any inventory adjustments of about 2.1 million. Now, this was another thing I wanted to talk about in this video. You can see the ratio of cost of goods, or COGS, to their actual revenue is extremely high. And that is one of the problems of being kind of a midstream or middleman focused company, is a lot of the profits are actually going to be realized by the LPs when Namaste purchases from them, and that leaves them with very thin margins when they're reselling this stuff on their CanMart website. Now, I think obviously the CEO is aware of this when he starts talking about comparing this company to Airbnb or banks or the Amazon of MJ. Those kind of business models all operate on very thin margins, and the way they make their money is through volume. So again, I feel like the keys to success for this company are going to be getting more products, more SKUs, and more volume driven through this website so they can start to realize those small margins at bigger scale. Now, as we scroll down, you can see some of the more specific lines like salaries, office and general administration, professional fees, selling and marketing. They were actually able to keep most of these costs fairly consistent year over year, and actually some of them were able to come down. So we see, for example, professional fees was 2.5 million in 2019, down to 1.7 in 2020. So that's good to see that they're controlling those costs, and ultimately that's what's allowing them to improve that overall loss year over year. Now, as a result, you can see total loss for the year came in at 26.4 million versus 63.2 in 2019, and that actually equates to 8 cents per share versus a 20 cent per share loss previous year. And the final point on here that was exciting to see is their actual weighted average number of shares outstanding remained relatively flat year over year. It went up by about 3 million shares, but it's good to see that they're not overly diluting their share count. So to close out the video, you guys, I did want to just double click on this CanMart.com US launch. You can see this is from February 26th. So again, fairly recent here. They did launch under CanMart.com in the United States. They currently offer hemp-derived CBD and smoking accessories, so they don't actually sell MJ in the United States at this point in time. But what this allows them to do is get this platform ready and primed up, so as soon as federal legalization comes into play, they've got the platform and the building blocks in place to fast follow that and get the product to market, hopefully ahead of some of their competitors like Smoke Cartel and Grass City. And that's exactly what they talk about here by building a first mover advantage when MJ becomes legalized federally. So for me as a potential investor, that's what's really exciting and the secret sauce with this company. And it's interesting, even in this article, they talk about running their business very similar to Amazon and looking at that high volume business model as the way to success. So overall, you guys, I think Namaste has had a rough run over the past couple of years, whether it's internal leadership changes or the pace at which they've been able to ramp up the products and partners offered on their CanMart platform. I definitely feel like the company has struggled a little bit, and that's been reflected in their share price. At this point in time, I feel like the share price has been beaten up quite a bit. The company is now sitting just north of $110 million in terms of market cap, which I think is a reasonable deal if they're able to get this US website up and running and take advantage of that first mover position when federal legalization comes into play. However, I know this is a very competitive space, and there's definitely a lot of other companies that have platforms and websites that are at a very similar point with maybe some more funding and diversified revenue streams. So one that comes to mind is High Tide. So for that reason, I don't think I'm going to be buying any shares of this company at this point in time. I definitely want to see them prove out this business model, start to add some more LPs and products to the CanMart platform, and see a few more quarters of revenue come in. The other wild card for me is when exactly federal legalization is going to take place in the States. I feel like if that's delayed much more than maybe 12, 18 months, Namaste really might face a cash flow challenge. And for those reasons, I personally think there's other plays in the MJ space that might offer a little bit less risk with very similar reward or upside. Now, as always, please take a second to like this video, subscribe to the channel if you haven't already, and let me know in the comment section what you think of this analysis, if you agree or disagree with my statements about Namaste, and if you currently hold any shares in this company. And on a final note, you guys, please make sure you have a great rest of your day.